How's it? Sean here from Mel's YouTube book site, YouTube channel. It's lesson 5 today. Lesson 5. So just remember all these lessons that we're doing, all the lessons before that precede these lessons. And each lesson is important to go and make sure you've watched. You know, accountancy and bookkeeping is very intricate. It's figures based. There's procedures involved. And you have to follow each and every step. If you get the wrong step, then all the figures and stuff is wrong. So it's very important. I just want to recap. Remember in 4 we taught we explained to you how we got those wages. You remember Constance wages, Mel's salary, and how we worked out the pay as you earn, sorry, and the medical aid and how. Remember this lesson. Please go watch this lesson because I'm going to show you this. We're going to use those expenses. We're going to account for them because we're going to do a trial balance in this lesson. All right, so it's very, very important you go watch this. All right, so let's get started. Let's get started, all right? Okay, so we're going to start with a journal. Journal has all kinds of entries. One of the reasons we do a journal is because we like, if you make a mistake somewhere, it's called a mispost. And I'm sure you've heard me mention this before. A mispost is when you put an incorrect entry somewhere. And that always goes in the journal, besides other entries as well. Okay, so I'm going to read this. As usual, watch my mouse, because my mouse tells the full story. Okay, so cash book. In error, the electricity and water account payment of $50 was charged to the cell phone, and the cell phone $15 was charged to the water and electricity account in the cash book. We need to correct that mispost. There was a mistake there. Number 2, a cash register and desk and chairs were brought forward and paid for in the cash book. Please see the journal entries. Okay, now this is the journal for the month of March. All journals must have a debit entry side with an equal credit entry side and must balance on both sides. So let me just go down there quickly. You see the balance we get here, the 66. Now I'm going to explain this in detail now, but the 66 journal accounts must balance. If they don't balance, there's a mistake here. All right, just to make sure you get that. All right, so journals are okay. Now I've said that. Okay, journals are usually done when you've misposted a payment or made a deposit to the wrong account. A journal is written when either a discount is allowed or a discount is received, and when payment of an account is paid up front. All right, you got that so far. Journals are also done at month end when all accounts have been updated and errors are found or adjustments need to be made to an account. It is then corrected by a journal and put into the account in the general ledger. All right, so number 1, correcting adjustments in the journal book and depreciation. And depreciation is also coming in here. Depreciated to do from the assets brought forward from the shop. Remember the depreciation account that we did, assets and depreciation. All right, so correcting the adjustments in the journal book. Adjustments, debit, as I said, and credit. All right, let's start here. Electricity account, the correction is 43 Rand and 48 cents on the debit side. All right, this here, this 6 Rand and 52 cents is the VAT. All right, that we also put the VAT in there. Cell phone, a mispost. Okay, 43 Rand and 48 and the 652. You see that we've corrected it now on the credit side and on the debit side. We've put those entries in. All right, expense. All these are expenses. All right, in the cash book, the cell phone account correction, $13.04, and the VAT underneath that, and the mispost for the electricity, 13 Rand and 4 cents, and $1.96 on the side of the VAT. Depreciation, okay, costs, depreciation running expenses. To debit the running costs of $1.30 and depreciation in the trial balance to credit the assets in the trial balance of $1.30. Remember, that was the depreciation from the chairs and the cash register we bought. The net total, and these must balance, the net total is $66.30. And on the credit side, also 66. Journals must always balance on the debit and the credit side. All right. Okay, so this is the bicycle shop cash book. Now, we did this cash book in lesson number 3. So I've just brought it forward here. I've just put it in this lesson because you've got to remember we're going to take all these expenses from the cash book excluding VAT, and this is going to go into our expenses account, which is then further going to go into the trial balance, which we're going to use later. So I've just brought this in just to bring in the cash book so that you know that we're going to be using these expenses. So just as a quick reminder, we paid Factory A, we had some customers, and they paid for their invoices, and we got to a total of $14,618.75. That's from the cash book. Okay, let's get down to the running costs and expenses section. Very important. Here you itemize all the total expenses for the month, excluding VAT, on the debit side, and then you subtract the smaller total from the larger total. All right, so the running costs and expense section. The wages accounts costs. Remember, we had a casual worker, Joe. We paid him $20. Now, he doesn't earn enough to earn UIF, to pay UIF, and to pay tax. All right, so he just gets paid out $20 from petty cash. Then we had Constance. Now, she doesn't earn enough to pay tax, but she does contribute to UIF, and her contribution is $1.50. So the net casual wages is $168.50. Now, let's go through the business running costs section. All right, so now why we brought that cash book, because all those entries from the cash book are going to come into this expense, this business running costs that we're going to put that we're putting in here, and it also has a journal and a petty cash section entry as well. Now, all these items from the cash book come through excluding VAT. So we had the rent amount over there, $86.96. We brought the electricity and water excluding VAT. Now, we also did, if you now remember earlier, we did a journal for the electricity and water and the cell phone. Those were the missed posts. And we did one also for the depreciation as well. We've just done journal entries for those. All right, so just that this 3 stars, just to remind you that we did those entries there. Okay, so through all the expenses, the depreciation, the stationery, the petrol, the staff refreshments. Now, down to the salaries part. This part, these breakdowns, these amounts, I explained it to you in lesson 4. Okay, so I'm not going to go in depth into this. I'm just going to highlight what the amounts, the final amounts are. If you need to understand how we got to these amounts, you can go to lesson 4 and watch for that. That's why I always said lessons lead into lessons. All right, that's why we did lesson 4, because this is quite intricate, this whole section here. All right, so her salary, Mel's salary was $300 on the debit side. Her UIF contribution and her tax and her medical aid was $18. The tax man, we paid out to the tax man was $14. That was his section. And her medical aid was $10. All right. So we add up all the entries in the debit side. It comes to $680.57. We add up the UIF contributions of $1.50 and $18. We get to $19.50. We take this amount here, this $19, away from the $680. So the business running costs less VAT taken in the cash book is equal to $680.57 minus $19.50, which gives us a total of $661.07. Very important. See the journal entries for the missed post, electricity and cell phone, and the journal for the depreciation. So that's just telling you there. I just put this in here just to remind you over there that those are journal entries. Please note that in VATable items, that VAT is excluded in the running cost section in the general ledger. Salaries and wages UIF is 1%, and the UIF for the company contribution is 1%. In total, 2% is sent to the receiver, including pay as you earn, and that's that $14 over there. All right. Okay, so let's go down to the trial balance. Okay, we're going to finish off with the trial balance for the month of March. Okay, the trial balance is divided into 2 sections. The very first section of the trial balance is where the income and expense accounts has every account itemized, whether it be an expense or an income total at month end, and the profit or loss is transferred into the second section. Right, the second section of the trial balance is where the information is gathered to create a balance sheet. All right, so let's go down to the running costs, income and expense accounts. Okay, here you itemize all the total expenses and the income for the month on the debit side and all income on the credit side. You then subtract the smaller total from the larger total, and the balance gives you an idea of whether our business did well or not in the month of March, and shows a profit or a loss. The profit or loss is then transferred into the retained income section on the credit side, or if it's a loss, on the debit side of the trial balance. And we're going to show you all this now. All right, so remember the month of March, we had all these control accounts, all these counts we did in the month of March. Remember the sales control account, the purchases control account, the inventory, the customers, the suppliers, the assets, the capital, the rent deposit, the cash book, the petty cash, and finally the VAT control account. All those balances we're going to bring, all those figures we're going to bring into the trial balance. Okay, so the trial balance control accounts for the bicycle shop. So financial income and running expense accounts section. Okay, so the sales control account excluding VAT on the credit side. The interest received, the wages and the casual wages. That's at 168 and 50 that we worked out with Joe and Constance earlier. Purchases excluding VAT, rent, electricity, cell phone, bank charges, depreciation. Okay, that's at $1.30. The print and stationery excluding VAT. BP petrol station. All right. Staff refreshments. Salaries. That's at 282. That was 300 Rand for Mel. $300, sorry, that we charged, that Mel's salary was. But we took off that $18 for her tax and her UIF and her medical aid. The pay as you earn and the UIF company contribution of $14. That's the taxman's money. That's to the taxman, and her medical aid of $10. You add the totals up, the credit side, you add the debit side, and you take the smaller amount away from the larger amount, whichever side it is. So in other words, the profit and loss retained income of $2,595 minus the $1,306.07 gives us an amount of $658.93. That's the profit we made for the month. That's how we work it out. So if this was on the credit side, say this was larger, the debit side was larger than the credit side, this figure would be on the credit side, which would mean we'd made a loss. So this is how we work out whether we made a loss or profit in our business. And that enables us to balance the two sides. As you see, 2595 on both sides. We get this figure here, and then we add that figure to that smaller figure, which we've now got, where we took away, and we get the balance. All right, the balance. The balance sheet is in the second section of the trial balance. This is a continuation of the trial balance. All right, so the retained income brought forward, that's 658 and 93 cents, that profit we made, we're bringing it in on the credit side of the trial balance. Long-term liabilities, capital of $15,000, the assets, the depreciation on the credit side, the ABSA Bank, that was the cash book balance of $14,000, remember that amount, the inventory controls account, the customer control account, the rent deposit, the current liabilities, the petty cash, the suppliers control account on the credit side, 862 and 50 cents, and finally the VAT control account of $13.78. You add up the credit side of the trial balance, you get to that figure. You add up the debit side of the trial balance, you get to that figure. These two figures must be equal. In other words, they must balance. If they don't balance, there's something wrong. You've either entered in an incorrect entry, or you've misplaced a figure somewhere, or you've put a wrong figure down. You need to go find it. So finally, just to remind you that the trial balance must balance on both the debit and the credit side. They must be equal. That means they balanced. There is it. Hooray, we finished for the month of March. And there's a nice photo of us calculating us all out. Okay, so this is the end. This is not the end of the lessons. This is just the end of our books for the month of March. Now, next lesson, we're going to open books in the month of April, and we're going to bring forward all those figures into the month of April. And the reason we're doing that is because every month you bring forward the figures from the last month. You carry them forward for the next month. That's how you open those books. So we're going to do some books for April just to show you how to do that. And then when you run your own company, you just got to remember to rinse and repeat. Just follow the same process. You do the books, you carry the figures forward to the next month. You do those books, you carry them further on. All right, so great. I hope I explained everything here. It was quite a tough lesson, and I just want to make sure that you understand everything. All right, my name's Sean. Please like this video if you like it. Please share this video with everybody you know, and subscribe to our channel. Okay, subscribe, and please leave any questions or comments. If you have a comment or you want to ask a question, please, I'm more than willing to help you. All right, this is Sean here from Mel's YouTube book site YouTube channel. Good day on you.